3, 2, 1. Do we got it? Awesome. We're there. How you doing, friends? Ernie here, and this is the 0 Days to Expiration podcast. 0-DTE.com. That's the website. That's where we live. Actually, we live most of our trading days on Discord, but that's the place that you have to go if you want to join us. Today's episode is about how 0-DTE and me, will engage in a program of reprogramming you, or more accurately, I should say, deprogramming you, so that you are of empty mind, so that you can accept this new way, a proper way of approaching the market. This is under the premise, of course, that everything, and this is not a hypothesis premise. This is a truth. This is an absolute, that virtually everything that you have learned in trading is absolutely wrong, incorrect. You have been under the spell. You have been part of a cult that has been teaching you a certain way, certain tenets, certain philosophy, methodology, strategies, indicators, anecdotes, sayings, whatever it is.
New visitor.
You have been inundated with this wrongthink for many, many years, for decades. And all of it is part of what I call the broker narrative, a grand conspiracy. Not the type of conspiracies are not necessarily falsehoods or things that are made up by somebody. That's the pejorative that is the normal parlance in the lexicon of our times. This is truly a conspiracy that I was part of within the brokerage community, within the online brokerage, where they were trying to think of how they were going to extract as much money from their customers as possible, and at the same time make it appear as if they are trying to help you. And hence you have modern day trading methods, technical analysis, for instance, chart reading, price action, Elliott wave, which is actually a throwback to many years before, Fibonacci, moving averages, crossovers, trend lines, indicators, MACD, RSI, stochastic, all of these things. If they were the truth, if they had any kind of validity, any real power, then more of you would be making money on a consistent basis. However, what they do is they'll throw into that another catchphrase, or another reason why you might be failing, and that is because of your psychology. All the tools we have laid out for you, but your psychology isn't there. You must work on that. Then they'll tell you that it's 90% psychology, or it's 50% psychology. Which is it? We don't know. You've been taught that putting on high probability trades is the pathway to trading nirvana, to riches. You have been exposed to these charlatans that broadcast from their Beverly Hills mansions or their cool cribs, driving Lambos and with hose on their arms. Lambos and hose. You too can have that lifestyle if you just follow their formula, which is nothing more than them brainwashing you into believing that this is the way that you need to trade. Even with things like options and seemingly altruistic networks like Tasty Trade. Tasty Trade is a wonderful organization. They are so willing to give away thousands and thousands of dollars worth of education this same education that you would literally have to pay thousands of dollars for if you joined one of these other charlatan organizations, they will give it to you for free. And in reckless abandon, they'll do it every day, as long as, for whatever you can take. It doesn't matter. It's a really, truly a remarkable organization. But they do it for one reason. For one reason only. Now, you may think that it's because they're trying to teach you to trade, to gain your confidence and to build you up and blah, 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 blah. But no. The education itself is valuable, but their methodology is very, very specific, and it follows directly to the T the broker narrative. The broker narrative being, we must get traders to trade short term, spend as little time in the market as possible, create as many transactions as possible. Hence, with Tasty Trade, and by the way, I'll get to how Tasty Trade is enacting this and how they are also practicing the broker narrative. But they teach you the law of big numbers. Put on as many trades as you can with a wide diversity of strategies that have high probability outcomes, which is veiled in the power of options, and it is very powerful. A step above your typical technical analysis. They knew they couldn't teach you technical analysis. That wasn't their road to broker nirvana. Because Tasty Trades ultimately is a brokerage. After spending years online, giving away education, on tastytrade.com, they opened up a brokerage. First it was Dough, then it turned into Tastyworks. Their ultimate goal was to hook you with their free education, their altruism, so that you would then join their brokerage and practice their law of large numbers. Put as many trades on as possible, a wide variety, short term, in and out. Ka-ching, ka-ching, ka-ching. Because they do not make money on the fact of whether you are a winner or a loser. That has of zero import to them. They make money by you creating transactions, pushing the button. The more you push the button, the more money that they make. It's as simple as that. And they are no different than any other broker out there. More sophisticated brokers will go to the extent of creating sell-side analysts and consulting organizations where you can pay tons and tons of money to listen to their charlatan sell-side analysts to get you all up into a bunch about a particular stock or whatever and get you to buy that thing. The crazy little thing here, the crazy little secret is that most of these sell-side analysts, the vast majority of them, I would say 99% of them, 99% have never worked an hour in the industry that they analyze. Not 1 hour. Yet they are controlling, literally with their recommendations, billions of dollars. Again, all of this, all part of this broker narrative, designed to send you down a path to benefit, not you, but the broker. It is a marvelous scam, and it continues to this day, and it is not recognized in any way as being illegal. They are providing a service. They are giving you education. They are telling you and educating you on how to make money for them. End of story. So everything that you have learned in trading is all centered around this. Every educational institute that is out there, even the ones that have become totally independent, are offshoots of this. They still follow the same formula because they know that it works, that they can, if they can provide a quality education and seemingly take heart in your advancement, you'd be willing to fork over some money. Some of these places will charge as much as $20,000, $25,000, $30,000 so you can learn technical analysis and other strategies that you can get for free on Tastyworks or Tasty Trade. Most people don't know that. There is nothing special about going to one of these trading institutes and spending $25,000. What you learn there is no different from any place else that you can pick up that exact same information. But even that, all that information, it's the exact same formula. Create as many transactions as possible, put on a variety of different strategies. They call it diversity. Trade different diverse assets, again, and create transactions. That's what it's all about. Yet, with all of that education in front of you, there are a few people that rise to the top and become successful, but they are a very, very slight minority. Very, very small. Maybe 2% tops. And most of those people are professional traders, and they're not doing what you're doing. But 98% of you day traders will eventually lose or are losing. The number 90% used to be thrown about, completely off base. There's been a study recently with 350,000 day traders. 98% lose. So the industry, the brokers, they are invested 100% in programming your mind in a certain way. And this industry expands well beyond just the brokerages. It's all the financial talking heads, the networks, everybody. The news outlets, all of them are geared around the exact same thing. So what we're here to do, what we do here, is try to reprogram you, show you a different way, show you that you do not need technical analysis. You do not need indicators. You don't need any indicators at all. You do not need trend lines. You do not need moving averages. You do not need RSI or MACD or stochastic. You do not need Elliott wave or price action or Fibonacci. You need none of that. You do not even need the probabilities stated in your trading platform. Imagine that. You need none of those things in order to become consistently profitable. Let's see, we have a comment here. Finance ABC says, you will win some and lose some. Hopefully the odds should be in your favor when you sell options. Well, there is a way to definitively put the odds in your favor. But this whole idea of win some, lose some, and many people talking about risk to reward, and putting on stops and managing your risk as the way that you get to this sort of winning way, again, is also part of the broker narrative. It is the losing strategy. That's right. Managing your risk is a losing strategy because it really should be called how to gain or how to create more losers, how to guarantee a loss. That should be what placing stops and managing your risk should actually be called. How to achieve more losers. Because that's exactly what it does. It is training you into believing that by trying to minimize your risk or take on more risk so that you can make more profit, because that's another fallacy, that you must take on much more risk in order to potentially gain more profit, which is true in maybe a pure casino. You need to risk more in order to get the bigger, but it is not true in trading. First of all, in the casino, you cannot trade options. There is, however, with options, a way to gain an edge on what you're doing. And it has to do with the property of options. And options are nothing more than a way to sell insurance on price levels. And with insurance or a contract, they have a term and there is a premium. And that premium will decay exponentially right until the end of that contract. The pricing of that option is determined by the uncertainty in the market. The further away that pricing is made, the further out the expiration is. The greater the uncertainty, the higher the price. That's why you see in some options contracts and even futures contracts that are dated further out are priced or laddered higher. 1 month is higher than the next is the next is the next. This is a term. The term for that is called contango. Every once in a while, the market gets upset and that balance, that contango gets inverted, and all of the risk then is associated with the near term, and then the nearer term contracts are priced higher than the further out ones. But eventually that rights itself. That only happens every once in a while. That situation is called backwardation. Probably haven't heard of these terms. But there is one thing for certain, that when we price things out into the future, because they are unknown, we have a tendency to overstate what the risk actually is. And so we overprice options. Options are generally, about 85% of the time, overpriced. There is a definitive edge right there. If you were to sell options, be the insurer of price levels, then you're selling something that is overpriced. That means if you hold on to it, it's going to revert to its actual price or its actual value. Pure, cut and dry edge. There are also some realities out there that lagging indicators are a complete fallacy. That trying to come up with a strategy by using the normal risk to reward type of situations that most people are going after, maybe 3 parts risk to 1 part reward, or at best 1 part risk to 1 part reward. This lack of asymmetry, and particularly an asymmetry that is against you, where you're taking on more of the risk to try to make more reward because you've been taught that you need to take on risk to make reward, is completely false. But trying to teach somebody this new way of thinking, and the idea that you do not need all of these helper tools in order to get you to a winning mode, is very difficult. Again, that is what we do here at Zero DTE. Instead of looking at risk as the thing that you must manage, why not invert or flip that whole equation and make it so that the risk is small, that you only take on opportunities where the risk is very, very small, but the potential outcome is very large? It almost seems like a no-brainer, but people do not look at problems that way for whatever reason, because it's been drilled into them that you need to use these strategies this way. A vertical spread, a credit spread, an iron condor or a butterfly must be a neutral strategy, that this is the way you do it. You go long options. All of these things are crazy ideas. And then when you don't get it, they'll tell you that, well, perhaps you just didn't have the fortitude, the mental fortitude to stick with the program, to stick with the systematic way. That's another thing that is a big fallacy, that systematic strategies are the only way to trading nirvana. As if you can create a regimented system that will work on another system that is completely chaotic. It's a lie. It's a lie. It doesn't work. And it doesn't reflect the way the world actually works. It doesn't reflect how anything works in life. Everything in life, everything, virtually everything, is impermanent. Everything is changing all the time. There are no constants. Well, there are 2 constants in life. There is the constant of time. You cannot stop time, at least in our realm, in our experience here on Earth. You cannot stop time. Right? The other constant is the constant of change. There is no history repeats itself. History doesn't even rhyme. Every moment in everybody's life is different. Every moment from moment to moment is different. Why we don't treat things that way, I don't know. I think we're all looking for some level of stability where we can live in a world where we can set our expectations correctly and not be fearful of what might be out there in front of us. Instead of embracing the change, we embrace things that are false. We want to embrace certainty when there is no certainty. And this is how they get you in the broker narrative. They are selling certainty when that certainty doesn't exist. And you've been programmed to believe that there is some certainty in your trading. It does not exist. What you need to do is develop a completely different philosophy, a philosophy that revolves around the embracing of change and how you use change in your favor. And again, that is exactly what we do at 0-DTE. Everything that we do is predicated on taking small risks because we know we cannot predict the future. So why would you take large risks on something that is virtually not predictable? That's a rhetorical question. So we don't. We take small risks for potentially large gain. And then when we hit it, we do well. If we don't, we move on. It allows us to not have to be consumed with managing the risk. And instead, we manage the profits. That is a high quality inversion of the risk principle. A high quality problem to have, where you can now concentrate on managing the profits and disregard the risk, or make it so small so that it is insignificant, so that it doesn't consume you and make you fearful of every move that you make in the market. That is the one thing that I have to overcome when new members come in. It's a new strategy, so I understand they're fearful of a new strategy. They're unfamiliar with it. So they approach it in the same way that they approach every other trading problem, that they must be fearful of the risk. How do I manage my risk, Ernie? That's like what they always ask me first. How do I manage my risk? I said, we don't manage risk here. And that confounds them. What do you mean? You must manage your risk. How can you trade without managing your risk? So getting over that whole mindset is half the battle. But once you do, and once you get them to embrace the idea that change is what we embrace, we are students of change. We are for good change. We practice it as the very essence of what we do. Another term for that is kaizen, continuous improvement, expecting change. When you expect change, you have to alter your approach to how you're going to win at a problem. You're not going to take huge risks for small little potential gains like they do in every other 0-DTE program. Why? Why would you do that? That is almost like, hey, give me the knife so I can slit my throat. Well, Jeff A. wants to know, so is trading psychology completely a myth? No, trading psychology is incredibly important. But it's more important to put yourself into a situation where you're not going to have a bad experience. So if you can keep your psychology on a positive note, obviously that's going to benefit you. You're going to be able to make more clear-headed decisions, good decisions, if you do not have to worry about all the fear that's out there. So if you can enact a philosophy, a strategy, a methodology that does not have innate built-in fear or risk, then your psychology is going to be a lot better. It's when you have to deal with the fear that there is no choice but to have an incredibly tenuous and chaotic attempt to try to control your psychology. Almost impossible. So why do it? You do it because you're not aware of any other way to do it. That's because the experts, the so-called experts, are telling you that's what you have to do. And the reason why you can't win right now is because you have not yet learned how to master it. You have not yet learned how to master the thing that is not masterable. Is that a word? So Kirk has a comment. Analysts and indicators be like, as you can see here, there were a few downticks followed by a few upticks, finishing off with some antics. Yes. Yeah, it's all bullshit. It's all BS. An off-topic comment by Zero Gravity. Why should I be surprised? But how is your hand doing since this operation? Was it 2 or 3? Oh, yeah, it's doing great. Thank you for asking. I have to keep on stretching it. Bree says, if realized volatility is less than implied volatility, then and only then option sellers can make money, otherwise blow up risk. Yeah, that's it. Yet most of us are taught through gurus like John Carter that we must be going long options all the time. Going long all the time. Constantly trying to battle the problem, running uphill while the hill is falling away from us. That's exactly what trading long options is like. Running uphill while the hill is falling away from us. Wouldn't you rather run downhill while the hill is being built up for you? Just seems to make sense, right? I mean, that's the difference between going long, going long or buying options and going short or selling options. Selling options is what you want to do because the premium is generally overstated, overpriced, or volatility is overstated. Therefore, premium is overpriced. And so you have a definitive edge. But that's just part of the problem. The other part is how you approach problems and how you take risk. Take small risk, large potential profits, asymmetric. You put those two things together and you've got a fantastic formula. There's more to it, of course. There is some level of discipline that you have to enact. And that discipline, though, isn't trying to get a particular strategy down. The discipline is about how to perfect the process that you go through to improve what you do every day, day in and day out, and adapt to new and varied conditions. Because that's what the market is really about. It is about new, varied conditions every day. How often do we say that, man, that's never happened before? We say it all the time. Again, that's because the world is impermanent, constantly changing. Standards are constantly being updated. And then we must adapt ourselves to the new standards. So why should trading be any different? It's not. All of this is ingrained in the way we do things here at 0-DTE. We teach you to become masters of change. How to deal with an ever-changing market. How to take the right amount of risk for the problem that's in front of you. How to grow an account, to grow your capital, rather than try to create some sort of regulated income from a machine that is not regulated. You cannot create a sustained income from something that's chaotic. You can, however, find opportunities, lay small landmines that will blow up into growth, into a growth strategy for you in that type of environment. So that is how 0-DTE is going to change you. The best students that I have are those that come in without any preconceived notions. They're new to trading altogether. They do not have the baggage that most of you have. They do not have to unlearn all of the lies that they've been taught for decades. Mauro Fuggi, I don't know if I'm saying that one right, is saying, in regards of changing market conditions, can you mention some market conditions that are definitely not suited for your strategy, when presumably you won't trade or use a different strategy? Sure. Like anything else, we operate within certain bounds of propriety or comfort. And I use the analogy of Goldilocks and the Three Bears. Goldilocks had certain standards, liked porridge that wasn't too hot or too cold or just right. She liked the bed that wasn't too hard or too soft, but just right. And in the same way, we trade in an environment largely dictated by the level of volatility that is just right. If it is outside of those bounds, then we tend to ignore those areas, or we tread lightly, or we reduce our commitment, the number of trades that we put on, the size of trades that we put on, the breadth of them. So when volatility, we call that the Goldilocks zone, is between a VIX of 17 and 34, at least in this current environment, 17 to 34 seems to be our Goldilocks zone. And so the closer we can get to the center of that zone, the more fervor or the more intensity we can put into our strategy. It works better. But between 17 and 34, those are the bounds. The nature of our strategy is such that just by of itself will will contract and expand based on the level of volatility. So when we get down to anemic levels below 17, down to 16, 15, 14, our trading slows down, gets smaller, contracts. When it gets above 34, pretty much the same thing. It doesn't contract, but what we do is we find no opportunity because of the way we set up a trade. And we're better off waiting for it to peak and then retract back down into our zone. I find that higher volatility, even though it's chaotic, tends to be more conducive to taking chances or taking risks, what little risk that we take, because they allow us to take actually less risk, is more conducive in outside of our bounds than the lower volatility. But still, there are limits. Above a certain amount, we tend to back off. Below a certain amount, we naturally back off. So those are things that we've learned. And over time, we found that range tends to drift a little bit. There was a time for a long time, back in the early 2000s, where that range was much lower. Actually, right after the 2008 Great Crash, that low volatility zone worked its way down into probably as low as 15. So our range was going from maybe 15 to 30 as opposed to 17 and 34. But now it's elevated a little bit. And in decades or spans of time, that changes as well. As I said, everything is impermanent. Everything changes. We have to adapt to different conditions. And I'm sure in the next decade it may be different. So that's what it is here at Zero DTE. If you'd like to give it a try. Oh, by the way, I had thought about this earlier in this idea of breaking these habits, these bad habits, and developing new habits. Generally, it's thought that you need about 3 weeks or so to either break a habit or establish a good habit. And I talk about this in great detail on my website, dudefromearth.com. Go there. You'll learn about creating good habits. You'll learn about meditation. You'll learn about a lot of the principles that we talk about. And it's applicable to more than just trading, obviously. It's more of a general self-help type of website on, how to manage yourself in a chaotic world, how to embrace change. Dudefromearth.com. But anyways, you'll find that there are articles there on developing and breaking habits, breaking bad habits, developing good ones. And generally it's found that 3 weeks is what you need in order to achieve that kind of goal. Sometimes it's a little bit longer, sometimes it's a little bit less, but that's about the average. And then for that reason, that's why we offer here at zero-dte.com a 4-week trial. That gives you plenty of time to break the old habit, develop the new habit, and place yourself into a new way of thinking, apart from the way that has been designed to serve a different master and learn how to serve yourself. All right, that's it. This is the conclusion. I want to thank you very much for showing up here. Thank you in the peanut gallery for the comments. I really appreciate that. And today, another Zero DTE day. We're still in the midst of this trade. I don't know if is it going in our favor or not? I know that it was within profit. Yeah, oh my goodness, it's looking great. Yep, so another great Zero DTE day, another winning trade. Oh, this one looks like it's going to be fantastic. I want to thank you very much. Peace to you. We'll see you on Friday for the next Zero-DTE opportunity. Take care. Embrace the change. That's right, Mag, Rob. We are breaking upwards. You have to stop to collect your daily profit. That's right. We must go and leave and manage our profits now. Take care. All right. I always have this problem trying to find this friggin' off button. It's like behind a window. There. End stream.